You only get
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rice Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here.
Good evening, everybody. I just noticed that the promo video that played, it wasn't the right one. So I'm trying to figure out, I could have swore I had a different one. What's this right here? No, that's just the short version. That's just the promo version. That's not it there. I guess I didn't change it on the regular stream. I think I only changed it on that weekend chart prep intro. Yeah, so I guess I only changed it on the weekend chart prep intro. Yeah. That I don't like that. I don't like it's not playing the right one. So since it didn't play the right one, we're gonna roll that beautiful bean footage to let it play the right one.
Hello, my name is Timothy Lee Rice Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach you what is the stock market, what is a stock,
Nope,
what is an
that ain't
index.
it.
We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss.
That's not it.
Hello, my name is Timothy Lee Rogers Sr., and
That's
I'm the creator
it.
of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here.
Yes. Roll that beautiful bean footage. Roll that beautiful bean footage. Got it. Hey, y'all know I can't go any further until it do the right thing. I would not go I don't care. Leave, hit the door. Don't let the doorknob hit you with a good long split you. But I cannot go any further till I get the right thing on that screen. How y'all doing today, man? Hey, how y'all doing today, man? I had a good day today, man. How was y'all day? Did y'all have a good day today? I hope y'all had a good day today. There's a link pinned to the top of the chat on the U of the tube. I invite you to click on the link and join us on the Zoom. If Price did something today that caught you off guard, or Price did something that you didn't expect today, pull up on the Zoom and unmute and share your opinion. Be like, hey, Tim, I expect the Price to do this, but it did that. Can you help me walk through Price and see, hey, what did I miss? What signature did I miss? And I'll be glad to just pause everything that we're doing. Let's go back and help. Blah, blah, blah out. All right. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just me, Big Spider, if you don't hablo español. And you're in tune to another episode of the Intraday Price Action Recap, being brought to you by the Smart Money Manuscript. Who we got up in here today? I'm not going to hold y'all long today, man. We're going to go ahead and get to it. And I'm going, ease on down, the real hill. Get on out of y'all way. Ease on down, the real hill. We got light-skinned Deborah in here. What's going on, light-skinned Deborah? Light-skinned Deborah, if you at the crib, tell my dog sure when I said, what's happening? We got Jada up in here, the hardest working woman in the gang. Every time we on live stream, Jada be like, "Oh, I got to get back. I got to get back to work. I'll see you guys later. Thanks, Tim, for all you do." We got the homie Marco up in here. What's going on, Marco? We got Jim up in here. What's happening, Jim? I see we got Here to Learn and Share up in here. What's going on, Here to Learn and Share? Hey, I'm looking at this thing, right? I can't see if there's a comment behind the thing. No, it don't look like it, but Here to Learn and Share said, hey, it's the first comment on there, but it says she's number 2, right? Out of the top fans, the little top fan thing that they be doing. Then Kim says, hey, with the exclamation point. Here to Learn and Share said, hey, with a wave. Kim said, hey, with an exclamation point. Kim's hey is second, but it says that Kim is number 1 for the top fans. I don't know how that top fans work. At first, I thought it was just people who chat, run their mouth, but it don't be making sense on how it be ranking people, right? So what's up, Here to Learn and Share? What's up, Kim? Shout out, honey. Pulling up number 3 as a top fan, right? What's going on in Venus? Right? Everybody got a little hey, how you doing? How y'all doing, man? We got okay, we got a name that I ain't never seen before. It's a Tessa. What's going on, Tessa? I've never seen the name Tessa in here before. Tessa, if this is your first time tuning into Tim's Tidbits, welcome. If it's not your first time tuning into Tim's Tidbits, I jolly pies, but I've never seen the name Tessa hanging out with us in the Zoom or in the YouTube chat. So welcome, Tessa. We got Sonya up in here. I don't know if me and Sonya gonna be, friends anymore, because she didn't know who Foghorn Leghorn was. Right? She said she had never heard of Foghorn Leghorn. So I don't know if I say I don't know if we could be friends. Right? I looked at a vid. I went down a rabbit hole today because I was talking about Foghorn Leghorn. When was that? When was I talking about Foghorn? Was that last night? Was that yesterday? Was that last night I was talking about Foghorn? I think it was last night. Oh yeah, last night. I went down a rabbit hole looking at a bunch of Foghorn Leghorn stuff. And then somebody had a reel that I watched. And they said the placement go back and forth as people comment, and it starts over every stream. Okay. Due diligence. And the guy was talking about Foghorn Leghorn. And like, as far as I know, Foghorn always say, I say at least 2 times. I say. He said at least 2 times, like when he said it. And he said like several times during I say, boy, that I say. But the guy was talking about that when back like late in like back in the 60s or whenever Foghorn first came out, he said Foghorn never used to repeat I say. He would just say it one time. He would just be like, I say, boy. And he played some clips of Foghorn talking, and he never said I say. He never like stuttered it like that. And I was like, I never knew. I never knew that Foghorn hadn't always said I say, boy. Like, as far as I know, Foghorn gonna stutter that I say. Anywho, I see more numbers than I see names. What's up, Rhonda Green? I see more numbers than I see names, but them all the names that I see. So that's all I'm gonna say. So we're gonna go ahead and share our screen, and we're gonna go ahead and get into the no. You don't remember Foghorn now. You don't remember him now. You can't be trying to no take backsies. No take backsies. Hey, before we get started, let me unshare my screen. If you purchased or signed up for the Smart Money Manuscript, if you did not use your real email, right? You may not get the notifications about the live streams. You may not get the notifications. I went into the site. I figured out how to set up forums, right? I set up a forum today. I ran a test with the forum with my first post. It worked fine for me, right? So I sent out a text to a few people whom I have their personal contact information, right? And I said, hey, is this working properly for you? Two of the people got back with me. One of them, it worked flawlessly because they used their real email address to sign up. So they got an email that says, hey, Tim Rogers posted something in the bat signal. And they got a notification inside their WAP app. Hey, Tim Rogers posted something in the bat signal. All right. But the person that didn't use their real email didn't get the email because they used a fake email that it sent it to that fake email, but they can't remember the password.
Real email.
They can't remember the password. Did y'all hear that? Did y'all hear that? My grandma told me a long time ago, if you throw a rock under a house, y'all know the rest. If you're in my age demographic, you know the rest, right? Marco, do you know what happened if you throw a rock up under the house? Marco? Sonya, this your chance to redeem yourself.
No, I don't.
Oh my God, get off my live stream, Marco. Sonya, this your chance to redeem yourself. Sonya, what happens if you throw a rock up under the house? If you throw a rock up under the house, if you throw a rock up under the porch, what you said is echoing? Y'all getting the echo? Y'all getting feedback? Y'all getting feedback? Hello, 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 hello.
Sorry, I had YouTube in the background.
Oh, okay. Sonya.
I'm here. Tim.
Yes.
Does it matter if they're home when you throw the rock?
You said, do it matter if they're home? What? Oh my
Never
God.
mind. I'm stalling because I don't know.
Oh my God. Tessa, I know you said you've been here before on YouTube, but welcome to Zoom. I'm an old retired man who sits around the house with nothing to do. And I talk to a camera for hours on end. So when I have the opportunity to interact with humans via Zoom, I like the interaction. So Tessa, do you know what happens when you throw a rock up under the house?
Does a hit dog holler?
The hit dog will holler. So I was just telling y'all a story, you know what I'm saying, about somebody who used the wrong email. They used a fake email because they'd be like, I ain't use my real email for this mess. And then now, when people be trying to utilize the system and they don't get the emails, oh, I need you to send it to this. This is automated. I don't get it, the computer know what you put in it. But I said all that to say, make sure whatever you signed up with the Smart Money Manuscript with through WAP, whatever email address you got attached to your WAP account, make sure you have access to that, right? Because if you look over here, am I sharing my screen? Let me share my screen. I was sharing my screen. Let me share my screen again. If you look over here, right, I sent out this right here. It says 5 hours ago. And make it bigger so y'all can see. Right? I sent this out 5 hours ago. As you see, it's in what's called the bat signal. Right? The back signal. And this is just for the live stream channel. Right? You know, when we be in Discord, I'll be like, hey, let me send out the bat signal. I set up a forum inside WAP, and it's connected to the God dog. What did I just do? All right. It's connected to the Smart Money Manuscript. All right. And it says a well-earned reputation for under-promising and over-delivering is a powerful asset in any field. It builds trust and loyalty, showing people that you consistently exceed expectations. With the purchase of my new course, The Smart Money Manuscript, you will gain access to a wealth of knowledge and strategies for financial success. But I believe in going beyond the course. I believe in going beyond the course material. That's why, as a participant, you will also be invited to monthly Q&A live streams, giving you direct access to me and a chance to get your most pressing questions answered. The dates and times for these exclusive sessions will be announced here in our dedicated community forum, affectionately known as the Bat Signal. So, this was sent out today. It worked flawlessly for me. I got an email directly to my email. It popped up on my phone. Bing! As soon as I did it, right? I opened up the WAP app. I had a little notification in there. Bing! Right? Somebody else said, hey, sent me a screenshot. Hey, I got this inside my WAP. Had a little notification. This is the email that I got. Had the email. Right? The email said the same thing that the WAP said. Right? So if you don't know the email address that you signed up in WAP, or if you don't have access to it, make sure you got access to it, because the bat signal is where I'm going to be posting the date and time for the monthly Q&As for the Smart Money Manuscript, right? Because I don't believe in just, you know what I'm saying, giving people educational material and leaving them out there flapping, right? OTF. I don't believe in leaving them out there flapping. All right. Now, with that out of the way, let's I signed up with my real email. No, you didn't. If you signed up with your real email,
I did, and it
you
says
would
the
have
real one in WAP. So I don't know why I'm not getting it.
you would have got go check your spam. I don't know. Maybe it went to your spam. Because it came directly to me. As soon as I did it, it came directly to me. Bing! It came directly to me. It said that I had posted something. Okay, let's do it. I just closed it. Let me go in. I'm gonna do another one just to I say I'm gonna do another one just to see if you get an email. Right. WAP. All right. Okay. Good evening. Good evening, everyone. Uh-oh, might have if I spelled that right. Good evening, everyone. All right. I don't have my phone here with me. I don't have my phone here with me, so I can't see if it popped into my phone. But I just did it again. And y'all let me know if y'all got an email. Uh-oh. So, and then as you can see right there, see that little 2 there? I got notifications. Right. My notification came in. This is my WAP here. See, I got notifications. Notification right there. Right. So Deborah Speller liked your post. Sarah liked your post. Right. So y'all, I see that y'all got it in the WAP. Did y'all get the email? I see that y'all liked it in the WAP. Did you get the email?
I didn't get the email. It must be something I don't have clicked on and walked or something. I don't know. Because I only got one email
I don't know.
address.
Let me see
Hmm.
what happened. Not, I'm going to here. Let me see. Settings. Where are my settings at?
What going on, Tim? What I missed?
What I go on? Nothing. Just trying to help Deborah figure out why she's not getting the emails inside WAP.
Which Deborah?
Hmm?
Light skinned Deborah. RN Deborah getting everything, but light skinned Deborah, she ain't getting.
Stop it.
Let me see here. Where's my settings? See, they be changing stuff every day on this thing. It be getting on my nerve. Okay. And I got to make sure I be over here on this other page because, like, when you be going through stuff, they be having like all your personal information up there. Matter of fact, let me stop sharing my screen in case I do something crazy. Connected accounts. No, that's not it. Security and privacy. That's not it. Billing membership. I'd have seen it before, but they done moved it because there's a thing where you can tell it what you want to get. App settings. Nope, that ain't it. Menu. Next. Okay, let's go ask the AI bot. I need to ask the AI bot. Because they done moved it. Let me go ask the AI bot. Hey, if there's anybody on here who got an issue with me going through this right here, y'all already know what it lick read. Y'all already know what it lick read. How? I was talking to the bot earlier about configuring the what's name. What's up, son? How was school? How was practice? Y'all hold on for a second. Flashing, lights. To turn on my email notifications for flashing, lights, flashing, lights. All right. To turn on email notifications, you will need to adjust your notification settings in your dashboard. Here's how. Go to dashboard under settings. That's what I did. Under settings, click notifications, toggle on the notifications you want from your WAP. From there, you control various notification types, including payments, disputes, or other important updates for your business. Since you are asking about forums specifically, keep in mind that all forum posts are automatically emailed to your subscriber when you publish them. Yes, so it say all forum posts. This is what I was saying before. It says it's automatically sent to the subscribers when I publish them. Right. So they're saying that it's supposed to be an automatic thing. All right. So go to there. I go to settings. I go to all right, go to the settings, say all notifications enabled. Right. So went to the dashboard. When I went to dashboard, I went to settings down there under admin. And that's what mine looked like. But this is like behind the scene for like, because it's my WAP. I don't know what it looked like for you. All right. But it's got the notifications. See, it's got disputes, joins, payments, resolution. This is stuff for the back end. This ain't like, but like you seen in the chat, it said that's supposed to be an automated thing. Right. So IDK. Maybe check spam as I got my notification in the mobile app and email. That's what I said. Check the spam. Check your spam and see if it went to your spam. All right. Anybody else on here who signed up? Did y'all get the email that I sent? Did y'all get it? I know you got the email earlier. Jada said,
No, I ain't getting no email where we get it from.
You sent me the screenshot.
I was just messing with you.
I
was just messing with you.
Get off my live stream. All right.
Who having problems?
I ain't calling no names. I ain't. They be
bootleg computer.
They be complaining. They be complaining that talking I be singling people out. You know what I'm saying? Trying to file complaints on me or stuff like that. Right there.
Are they in the medical field?
I think that's what he said. It's given DeVry. It's given DeVry. Ain't that what the young kids be saying these days? Oh, it's given DeVry. Is DeVry still around? Look, I
don't think so. I doubt
it. Oh man, what's DeVry outside of Florida? Do anybody on here know what DeVry was? DeVry University. It was like one of the first online schools I ever heard of, like back in the 90s. It was so unaccredited.
I remember the commercial.
Me too. They would charge like $30,000 for a semester. Something crazy.
You should have took some of that 30,000 and put it on your cell phone plan. That's what you should have did.
No, sir. Did you talk about the cell phone? I have Verizon, the #1 network.
And we could tell you got Verizon.
Yeah, but AT&T don't sound like that. Tim, ain't know you were friends with a robot.
Oh, you
you ain't know.
you
Wait a
gotta
minute.
jump in too. That's
Wait a minute. You
cold.
ain't know I was friends with a robot? Hold on. Hold on.
Nah.
You already know. Hold up. You already know who that is that's talking. You already know who on the phone talking. That's Shonister on the phone talking.
Oh, okay, that's why it sounds like that.
Okay, man. Enough playing around. Enough playing around. Today is Monday, August 25th. And yeah, if you did not get an opportunity to join us for the weekend chart prep yesterday, go back and look at that, because I'm not gonna go back through all of that right there. But here is this purple line at the top. For those who don't know, my purple lines like this right here, when it's at a low and a high, those are my weekly highs. If you can't read that over there, I know the font is kind of little, right? Those, hey, wait a minute. Why that weekly high look so big? That's not right. Tighten up. 8. There you go. All right. That's my weekly high and my weekly low. All right. When we're coming into a new week, right, what do we pay attention to? The liquidity resting at the prior week, high and low. Right. When we come into a new day, what do we look at? The liquidity resting at the prior day's high and low. Right. The algorithm is so kind and generous that, hey, Sarah, don't be retracting those statements. Say it with your chest. Right. It's so kind that it gives us dealing ranges based off of algorithmic dispensations in time. So if you're not to the skill level that you can readily identify a proper dealing range, right? When you go into a new day, just look at the prior day's low and high, and it gives you a proper dealing range to work within. When you go into a new week, look at the prior week's low and high. That gives you a proper dealing range to work within. Now, mind you, when you're looking at the prior week's low and high, right, you're looking at this for the entire week, right? The entire week worth of trading. Okay. Even if you trade outside of it and come back and I come back in, you're looking at this for the entire week. All right. Because on the weekly time frame, right, from that low to that, from that low to that high, right, a weekly candle has been formed, right? A weekly candle has been formed. So when you're going into the next week, right, you're waiting for that next weekly candle to do whatever it's going to do and then close, right? Once it closes, that candle has formed, and now you got the next piece of information that IPTA wants to give you in relations to that weekly time frame. Same thing with a daily time frame. Okay. Now, let's test our ability to identify what's happening on the higher time frame by just looking at an intraday time frame chart. Right. Okay. And this one is relatively easy because we didn't do much today. Right. This purple rectangular shape here, that's our new day opening gap, right? That's our new day opening gap. So right here on this 6 p.m. candle, right there, right? What does this price at the open of this 6 p.m. candle represent? That represents the start of what? That represents the start of what?
The new day?
That represents the start of a new day, right? So if this is the start of the new day right here, if we come over here to this candle right here, that represents the end of the new day, right? Everybody tracking? Okay. We said that this swing high, this high up here represented the prior day's high. This low right here represented the prior day's low, right? Looking at that start of the day, end of the day, prior day high, prior day low, what type of day did we have today?
You call that an inside day, too?
Inside day.
An inside day. Very good. This is an easy one here because price didn't move, right? But Remember what I said, when you're going into a new day, when you're going into a new week, right? Once that new whatever closes, right, you have a little bit more, you got the next piece of information that IPTA wants to give you. So this is the open of the week. This is also the open of the day, right? The day has closed. So now we can say, hey, we had an inside day, because all of the trading that happened during this day, right? These are hourly candles. Let's count them out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12. Hey, who know how many hourly candles it should be? Somebody tell me who knows how many hourly candles it should be. Huh?
Gonna be one off, like 23.
23.
23. It should be 23 hourly candles. 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. Correct. Because that calendar right there is the start of today. You see, it says 6 p.m. down there. That's the start of the new day. 23 hourly candles. No, those are not worms crawling to glory. Those are candles, right? So we got 23 hourly candles. That lets us know that this is all the trading that happened on August the 25th, right? And where is it? It resides inside the highest high from August 22nd and the lowest low from August 22nd. So the August 25th is a inside day. And if we go up to a daily chart and we look at that daily chart, we can see that this daily candle is contained inside the full range of the prior day's candle, right? So, Tim, whoop-de-doo. What's so great about that? What's so great about that is when you train yourself to stay focused on what's going on the higher time frame while looking at the lower time frame, then that helps prevent you from getting sucked into trying to build your narrative from the lower time frame up. Excuse me. Because we want to build our narrative from the higher time frame down, right? That's why we call it TDA, top down analysis. Why? Because the higher time frame rules, right? The higher time frame rules. Who remember what we said? We had a open tape reading session today. Who remember what we said about where we were in relations to what we said about what type of dealing range we was in for the weekly and where we were in relations to that dealing range, and then what type of dealing range we had for the daily and where we were in relations to that dealing range? Who remember that from the tape reading stream? Hey, outsider. Hey, don't be that. Don't be retracting statements. Say it was your chest. Between the tale of two cities, that's before we that. I mean, that's once we start looking at the dealing range for the daily. But we said we was in what kind of dealing range and where were we in those dealing ranges as respect to the weekly and the daily. We did say we were between the tale of two cities, but that's once we started looking at the daily dealing range.
Discount?
Nope.
Okay.
What type of dealing range did we say for the weekly, and where did we say we were? All right. There you go. Empire Trading said weekly bearish, daily bullish. Very good. We said we was in a bearish dealing range for the weekly. We was in a bullish dealing range for the daily. Right? We said we was in a premium on the daily But we did not say we were in a discount on the weekly. Where did we say we was hanging out on the weekly?
Around equilibrium.
Equilibrium.
Yes. We was right around equilibrium. Like when the market was getting ready to open, we was hanging right around equilibrium, right? So because the higher time frame was at equilibrium, right? We said that we're going to do what?
Consolidate.
Consolidate. And when we consolidate, we just chill out and wait for more information, right? So, and then now, in hindsight, right, what do? Right? We had a 6 p.m. open right here. We dropped down. We had a 12 a.m. open, right? Right here, we came up to that 12 a.m. open, right? So what do we do here? We went above the 12 a.m. open. We dropped down below the 12 a.m. open. We swept out liquidity, right? We went back up to the 6 a.m. open, right? And then we dropped back down to the 12 a.m. open. Then we went up to a slight premium. Then we dropped back down into this order block right here, right? So when we're right around equilibrium, price tend to consolidate, right? When price tends to consolidate, what does it seem to keep drawing back to? It tends to stick around what? Not just equilibrium, but it tends to stick around what? Not new day opening gap. What's at the high of this new day opening gap? I heard somebody say something. What's this midnight price represent? It dropped down into lower time frames. Drop down to lower time frames. So y'all can see, y'all can really see. Right? Remember when I was on the hourly chart, I said we came back down into that order block, right? Y'all seeing it in real time right along with me, right? I'm not making this up.
Hey, Tim.
Yes.
Now, just say I was watching the hourly time frame, and what's 2 time frames down from that?
5 minutes.
So from the 1 hour, you go to 15, then 5.
Yes.
Okay. And I know this simple. Fold will go to 1 hour and then what? 15?
15. Yes.
Okay, so it's no 30-minute.
It can be if you want to.
Okay.
It's it's like whatever time frames you're using.
Oh, okay. I got you.
Yeah.
I'm with you. I'm with you.
Yep, is whatever time frame, but these are just the standards. These are just
Yeah,
the
I'm looking at
standards
those
that
right there.
you know what I'm saying, that they got built.
So if I'm looking at 15 to be 5 and then go entry on the 1 minute off of 15 higher time frame, right? Okay.
Ain't nobody, y'all see what I'm typing over here. Ain't nobody gonna answer.
So what are you typing? I see you mark 9:30 open and 2 opens there, and
Prices.
midnight is at equilibrium. Then is that
What was the question? I had not walked off, Tim.
I said, what
Price.
does price keep drawing back to when it's consolidating? If price is unwilling to
Oh,
leave
to the
these right
open.
here,
To the open.
yes.
Okay.
See right here, what's that right there? That's a 6 p.m. open.
Yeah.
That's a midnight open.
Mm-hmm.
That's a 9:30 open, right? We came over here at 6. We dropped down, right? We came up here. This is our midnight open right there. We went above the midnight open. right? We
Yeah.
dropped down, right? Took our sell side. We came back to the midnight open. We dropped down. We went up to the 6 o'clock open. We came back to the midnight open, and we dropped back down to the 9:30 open, right here. Right. See, on the hourly time frame, you couldn't see that 9:30 open. It was just an order block right there. But once we came down in time and we marked that at 9:30 open, right, during this consolidation day, which we already anticipated to be, possible consolidation because we're right at equilibrium on the weekly. And we had this large move right there, right? So what do we have? We got confluence of ideas. Let's call it a confluence of ideas. Why is that? Right? Because after we have a large range day, right? What do we anticipate the next day? It doesn't have to be, but what do we anticipate the next day after a large range day?
A nothing burger.
Yes, a nothing burger. We anticipate the algorithm to just engineer some liquidity or consolidate, right? Now, when we had sold it, time and price is fractal. So when we have a large range move in a session, right? After that large move, right? We kind of anticipate price to consolidate because we had a large move. Okay. Now we've had a large move, and inside this consolidation, right? We come back to equilibrium here, right? So now we're right around equilibrium. Okay. Right around equilibrium. We just had a large range move, right? We're coming into a new week, right? We're coming into a new week. So a lot of times, right? A lot of times coming into a new week, right? We might be at the top of a cycle. You know what I'm saying? Meaning we may be like at an accumulation phase, not always going to be at a accumulation phase, but when we be having these different confluence like this, right? Right. We got all these different confluences here. Right here, we had accumulation, manipulation, then distribution, right? Came here, went down, retraced, went up, right? So in this large range move after this right here, we just completed a power of 3. We accumulated, manipulated, retraced, distributed above these highs. Now we're up here distributing. Now what are we doing? We're moving into an accumulation phase. Where's this accumulation phase happening? Right around equilibrium of the weekly. You know what I'm saying? Even though we're in the premium of the day, right? So if you're in the premium of the day, what should you be looking for? Reasons too short, but you're in the premium of the day, but you're right at equilibrium on the week. You just completed a power of 3 here. So you may be getting caught up in some accumulation. All right. So the higher time frame says, hey, you might want to chill. Right? You might want to
I got a quick question.
Yep.
Okay, go back a little bit down to it with your mouse to the left and down right there. Down a little bit to the right. Then that comes yeah, right there. You see your manipulation? Now I know my eyes ain't trained like you, but it's looking like consolidate right there. It's looking like consolidation when you say we consolidated to the left, manipulated down, and went right here. You see right there where you at? That's looking like more consolidation to me.
Mm-hmm. And where
You
is it
know?
at? Where is it at? Right here when we break this structure right here.
Uh-huh.
Right. So right here, you're consolidating here.
Uh-huh.
Right. Then you drop down, taking out this sell side. Right. And then when you go above this high right here, right? Now we go into this area here. This right here is time distortion, but where we engineering this liquidity at? Right there at that breaking structure. Same if we come here, right? When we take off there above these highs, where we engineering this liquidity at? Right there at that breaking structure. Right. When we say whenever we go through, whenever we have like a breaking structure right there and price goes into a holding pattern,
Uh-huh.
right? That's a signature that's ain't nothing invalid about that, right? That's kind of a good thing. Why? Because it's pausing to give you opportunity to participate, right? And if we come here right? If we come here and look at price here, all right, we come here, we consolidate here, we drop down below and manipulate, right? Boom, boom. There's our little V-shaped move, right? We look for, oh, it's trap traders down here now, right? When we displace away, right, we create fair value gap, breakaway gap, change in state delivery, bullish order block, right? All of that. Go into this little area consolidation here, right above this breaking market structure, right? And then what do we get over here? Consolidation, manipulation, take off, retrace there, go up, right? It's pausing here to give you opportunity to participate, right? Gives you opportunity to participate on the manipulation move back into that BISI, back into that inversion fair value gap right there. What inversion fair value gap is that? The first one that we created when we went down and got that liquidity sweep right there. Come back to that there. Oh, it works all over the place. What about when you have one inside the other? What fair value gap is that? The first one we created before we dropped down, took out that, right? Where those bodies of the candles respecting that one right there. Everything is sitting on top of that inversion fair value gap right there. Consolidate, manipulate down to that inversion fair value gap right there, right? Take off, right? Retrace back down in the very next candle, right? Get an immediate rebalance, off to the races, right? So you're getting the consolidation right there, right? You're getting the consolidation right there. But in essence, right here, we broke market structure there. So when we see that consolidating at that market structure right there, that's just the algorithm engineering more liquidity, right? And it can do that for multiple reasons. It can be a time distortion thing because it ain't time to go yet, or it can be it doesn't have enough liquidity built up yet to make the move that it wants to make. Which one is it? Don't know, don't care, right? But we know that everything is built off time and price because we come here and get this breaking structure, right? That's right there at the end of the London kill zone, right? So we're coming to the end of the London kill zone, going into like the London lunchtime, right? And so we come over here. This is the open of the New York kill zone. So this here is the end of the London kill zone, right? So this is the dead time here. That's the London lunchtime pretty much. Then we start the New York kill zone. Once we start the New York kill zone, right, we consolidate a little bit more, manipulate out, right? Right here. This is the 930 open. So on the 930 open, what do we get? We get a wig snatcher. We go up, right? We go down, or it's either a wig snatcher or a Billis Judy swing. Looking at this, I don't know which way it went first. We can drop lower to see which way it went first to see if it was a Judy swing or a wig snatcher, right? So looking at it, it's a bullish Judy swing, right? So we open up at 930, go down, go up, trade back down below the opening price there, and then off to the races. All right. So what is this area here? Just time distortion during the dead zone. Just like when we go into the New York lunchtime, right? Going into that London lunchtime. Finished up with the London kill zone right as we broke structure, went into that little dead phase, started the New York kill zone, right? New York open, bullish Judy swing, and then we go. All right. Because even inside this little back and forth, you can still see the algorithmic signatures. Right. You can't stop the algorithm from being the algorithm. They can hold it in a range that pisses you off and stops you out and all kind of stuff like that if you don't have a wide enough stop to withstand the withdrawal. But I mean, withstand the retrace, but you can't stop the algorithm from being the algorithm. All right. So as we see there in a low probability day where we anticipating price to just consolidate based off of everything that we just said, right? We see those hallmark signatures there, right? Clear as day. Okay. Price started its trek down, slow meltdown, all the way down to equilibrium, right? All the way down to, all the way down. Oh, I can't shrink it up no more. Okay. Go to 5-minute charts there. Okay, so we, for our higher time frame, right? For our higher time frame here, coming into a new week, we're inside of a bearish dealing range. Inside that bearish dealing range, we pop back up to a premium, right? So we pop back up to a premium inside a bearish dealing range. Now, what do we say about the weekly time frame? Right? We said the weekly time frame. What is the weekly time frame giving us? What is it telling us? Is it telling us that it's ready to just blast off to the moon? Is it telling us that it's, it's ready to just tank, or is it telling us I really ain't got much to give you right now? What is the weekly time frame telling us? What do we say about the weekly time frame?
That we're still bullish overall.
Overall, we're still bullish, and we're just engineering liquidity right now. So if you just go with the last buy or sell program, bias, whatever you want to call it, you go with the last one that was in place until it's invalidated. On the weekly time frame, the buy program has not been invalidated, right? So you have to respect the buy program on the weekly time frame, right? So since the weekly time frame, the buy program has not been invalidated, and we're here at around equilibrium, right? We're looking at price around equilibrium of that range. Now we go back down to our 15-minute time frame here, right? We go back down to our 15-minute time frame. We see that last week created a bearish weekly dealing range, right? But the weekly time frame is still in a valid buy program, right? So since the weekly time frame is in a valid buy program, you have to respect that buy program, right? And then you just watch for signatures on the daily and lower, looking to see if they're starting to build the argument that the weekly wants to what's the word I'm looking for? Capitulate. Give up the ghost. I think capitulate is the word I'm looking for. See if the weekly time frame wants to capitulate, right? And
So is that what you mean by building structure?
yes,
how do we look for structure?
Yes, you let it build structure. You let it because the structure is being built from down up, right? Right? We go up for narrative and down for detail. Remember, was you around when we used to say that all the time, Jada? We go up for narrative. We go up in time frames for narrative, and we go down in time frame for detail, right? So we go up for the narrative. Okay, we're going up. What's the narrative of the higher time frame, right? And then you go down for the detail. Once you get down and start digging into the weeds, right? Then you can say, are we in high probability conditions? Are we in low probability conditions? Are we bullish? Are we bearish in the shorter time frame, right? If your higher time frame is in a buy program, but your lower time frame is in a sell program, is that high probability? Hmm? Hmm?
No.
No, it's not high probability. Okay. So if you are, right, the overall weekly, right, is still respecting the buy program. All right. When you have a weekly time frame, meaning a week like this that comes down and sweeps out liquidity, sweeps out sell side liquidity, right? And then takes back off to the premium. Okay. Yes, we're in a short-term sell program here, but we're still in an overall buy program on the weekly. So it's like you have to respect the fact that the overall time frame is still in a buy program. Okay. Does it mean that we're going to take back off to the moon? No, it doesn't. But you have to respect the fact that on the weekly time frame, the buy program has not been invalidated. Okay. So if the buy program has not been invalidated, whenever you come into a situation where you have a weekly bearish dealing range created, but then you have a daily bullish dealing range created. Now, where are we at? The higher time frame is pointing one way, and the lower time frame is pointing the other way. What does that mean? Now we're not in high probability, right? We're not in high. The weekly short term don't match the daily short term, right? Then we see here on the weekly, right? We've come back to a premium, right? But then we have eased our way back down to equilibrium, right? Right. We've eased our way. Notice I said we eased our way back down to equilibrium. Right. What happens when the elephant steps in the pool?
There'll be displacement.
Yes. You're supposed to say the water moves, but there will be displacement, right? When the elephant steps
the
in
water
the pool,
moves.
when the elephant steps in the pool, the water moves, right? You see what we was doing right here, right? And then we got over here, the elephant stepped in the pool. Boom! The water moved, right? Right? The water moved. Just like over here. Elephant stepped in the pool. Boom! The water moved. Right? When the elephant step in the pool, the water gonna move. Right? So we displace back up to the premium. Right? So at this time here, when we started this new day, when we started this new week, right? If the market was exceedingly bearish, right? Excuse me, we either would have manipulated out some form of buy side and then dropped when time met price, or we would have just dropped when time met price because we just took out some buy side and moved back to a premium. But what did we do? We came here, right? Price took off to the upside, right? And then we slowly came back down to equilibrium, right? So the market is not giving you any indication that it just wants to tank, right? It ain't giving you no kind of displacement down, right? We're just slowly working our way back down to equilibrium, right? And slowly making our way back down to equilibrium and then rallying back up, right? Does it look like this equilibrium is supporting price, right? Does it look like it's supporting price right there? Yes, it does. right? And what is there that's supposed to act as support? I have a bullish fair value gap, right? Sitting right there at equilibrium. We got bullish breaker sitting right there at equilibrium. We have an inversion fair value gap, the first inversion fair value gap that was created when we dropped down and took out sell side, sitting right there at equilibrium, and it's supporting price, right? The algorithm leaves these PD arrays and key places, right, and refers back to them. So right now, right, it's not trying to give up the ghost and just die off, right? Will it? It might do, but we don't want to speculate that it's going to do that. Why not? Because we're right in the middle of the range. And when you're in the middle of the range, price can go either way. Why? Because we're right here. We're around an area of fair value to buy or sell, right? To buy or sell. And we're right here at an area where the algorithm is just engineering liquidity, right? We're right in an area where the algorithm is just engineering liquidity. So what do we wait for, right? We wait for the algorithm to tip its hand, right? We wait for the algorithm to tip its hand. We wait for the algorithm to manipulate some liquidity and then displace, right? Which one do we want to see? When you're at equilibrium, it don't matter, right? But when you look at price, it just depends on, right, what side of the market you are leaning toward. Right now, what do we say? We're going into a bearish seasonality, right? We've taken out our higher time frame liquidity, right? We've taken out our higher time frame liquidity. Then we've gotten a bearish break in market structure. So from the intraday time frames, right, we're starting to build the structure that supports the seasonality that we're going into. Okay. We're starting to build a structure that supports the seasonality that we're going into. Right? On the weekly time frame, we have nothing to go off of outside of the fact that we're just consolidating. Right? Looking at the weekly time frame, we have nothing to go off of besides the fact that since we took out this all-time high back here on the week of June 30th, right? We've just been inside this range right here. Okay. So looking at the weekly time frame, right? We've been consolidating inside this range. We came up, made all-time highs and rejected off of it, right? Once we rejected that high, right? A reasonable target will be the low that sent you there. This week, we traded up, respect consequent encroachment of the wick, right? We dropped down and then traded all the way back up here, right? Closing above mean threshold of the potential order block, right? A potential bullish order block. Now that we've done that, we have, this is our, on the weekly time frame, this is our area of anticipated support, right? And then you just got the low, right? So on the weekly time frame, we have consequent encroachment of that wick. That's your area of anticipated support. And then you got the low, all right? Because we still haven't reached the reasonable target based off of that rejection, but we're still inside this consolidation. So we don't have any clear direction of does it want to keep going up or down. We're just going off the fact that we rejected a high. So the reasonable target would be that low. Was designed to stop you from getting to that low right there. We don't have a fair value gap there, but if you wanted to, since we got this long wick here, we got this big expansion, and then we got this long wick here that's acting as an immediate rebalance, right? We can look here and say, okay, we came down to the implied fair value gap and bounced up off of it, right? This is your area that's designed to stop you from getting to that low right there, right? So we come down this week to the implied fair value gap and then reject off of it. So now coming into this week here, here's our PD array that's designed to stop us from getting to that low, right? And then taking that swing low, right? Just fuels that, yes, I do want to take that low. All right. So going down to our daily time frame, right? Going down to our daily time frame after hitting the implied fair value gap on the weekly, right? What is it in line with, right? A bullish fair value gap on the daily, right? Come back down to the bullish fair value gap on the daily. Ant-Man can look through these candles because we came down the first time here, we totally ignored that bullish fair value gap and came down and swept the liquidity. Once we swept the liquidity, we closed back above it and then used it as a reclaimed fair value gap and went up, right? So now that we come back down, right, this is the first touch of the reclaimed fair value gap. So now over here, we've created it, we've traded away from it, then we traded back to it, right? So that's why Ant-Man is looking through these candles at that reclaimed fair value gap. We come back down, we got a daily reclaimed fair value gap in line with a weekly implied fair value gap because of that immediate rebalance, right? And then we set relative equal lows. We take off back to the premium, right? So now this is 1 day and this is 2 days, right? Where price has respected consequent encroachment of that SIBI, right? 2 days where price has respected consequent encroachment of that SIBI, right? Friday, we rallied up to the premium and we closed respecting consequent encroachment of the SIBI from the 19th, right? Today, we had an inside day and we closed respecting consequent encroachment of that SIBI, right? And we also have a BISI that we're down here. This is where when you heard Here Learn to Share, when you read Here Learn to Share said that we are in between the tail of two cities, right? That's it there. We have right here a SIBI and an inversion SIBI, right? A SIBI is designed to keep price down. An inversion is designed to keep price up. So we have a bearish PD array and a bullish PD array that price is in between. So we're in between the tail of two cities, right? We're in between the tail of two cities. Where is this ping pong happening, right? Where's that ping pong happening? Well, let's see. Let's take one of these that if we go from the right there, if you go from the highest high to the lowest low of last week, right? We're right there around equilibrium. The inversion fair value gap right at equilibrium, slightly in a discount. The SIBI is slightly in a premium, right? Where do you anticipate support and to buy? In a discount. Where do you anticipate resistance and to sell? In a premium, right? So we're right here in between the tail of two cities, right at equilibrium of last week's range, right? And not only are we right at equilibrium of last week's range, if we go to the top of the entire bearish dealing range that we've created thus far on this retracement, right? As you see, price is ping-ponging in between, right? Discount to the premium, right? Came up to a premium, respect consequent encroachment, dropped down to a discount, respect consequent encroachment, right? So we're right there in the middle, not doing anything. Friday closed slightly above equilibrium. Monday closed slightly below equilibrium for the overall dealing range. Right there, not going anywhere, not doing anything, right? And then when we look at the intraday time frames, right? So right here on the daily, you can algorithmically form a reason to go back to that high and go back to that low, or back to that high and to that low, right? Why is that? Because we came down into a discount, manipulated out sell side, retraced back up into a premium, and now we're respecting the PD arrays, the bearish order block, the bearish fair value gap. We're respecting all this stuff that's designed to push us back down to that low, right? Well, Tim, why are you looking at that low? Because this low right here, that's just low hanging fruit. That's not your target. Why? Because this is where we engineered the sell side liquidity at. Came down, took out a low. There's a new liquidity pool there, right? We came up, engineered sell side liquidity, right? Liquidity pool just grew. So now we come back here and come attack that liquidity pool. We're looking for that low right there. Okay. Now, looking at what we've done, we've taken out buy side liquidity, created an inversion fair value gap, right? In the short term, right, we created a change in the state of delivery here for the short term. Why? Because we traded below the opening price of this bullish order block, right? Traded up there, created a bullish order block, traded down below the opening price. That's a change in the state of delivery right there, right? Change the state of delivery right there. But that's just for the short term, because this is the actual move. Trading down below here is a much more significant change in the state of delivery, because this was the true move, right? Elephant stepping in the pool here, taking out sell side, taking out buy side, right? High, low, higher high, trade down here. That gives us a bearish breaker right there, right? So that change in state of delivery will be a much more significant change in the state of delivery, right? But we're allowing price to build the structure now, right? We're allowing price to build the structure. And now that we've come here, right, and created that swing high right there, right? What do we got here? Right? Right. That high is looking more and more important now, right? That high is looking more and more important now. Price is slowly forming structure. Okay. Price is slowly forming structure. And we're going into that bearish time of year. Okay. Does price have to stay below that low? No, it doesn't. But we're watching these signatures to say, okay, we've just created a very important high. Why? Because it's a swing high with a lower swing high to the left and a lower swing high to the right. Right. So we just formed an intermediate term high right there. Right. Yes. Right. Whenever you're in a buy program or a sell program, you anticipate these short-term highs to be protected, right? So if you're in a sell program, right, just say we're in a sell program and we create a short-term high here, and then we move down and create a short-term high here, right? We're expecting these to be protected until you reach something, and then it's okay to come back and take out some short-term highs, and it doesn't invalidate the program, right? But when you get to an anticipatory reactionary point and then you create an intermediate term high, right? Now you're looking for that to be protected because of the institutional market structure that you're building, right? You're forming this institutional market structure now. So you're looking for that to act as a protected high, because the little smiley face man is on his head right now. If you flip him around, he looks like Gru from the Minions, right? All right, so we're still respecting consequent encroachment. We're still respecting consequent encroachment. So on the daily, we're still in between the tail of two cities, right? On the daily, right? On the daily time frame, we have a deep retracement into discount, taking out sell side liquidity and retracing back up to the premium, right? So like on the daily time frame, was the buy program, right, has not been completely invalidated, but it's starting to give bearish signatures, right? It's giving bearish signatures. Short-term change in state delivery, inversion fair value gap, right? SIBI, right? Another SIBI, okay, is creating bearish signatures, but it still hasn't invalidated the overall buy program yet, right? Why we haven't had a bearish break in market structure, and we haven't had that change in the state of delivery off of the actual move that went up there. I just call it the real move, when the elephant stepped in the pool, right? Swoop, swoop. Right? So we haven't had that true market structure shift right there, trading below that low and giving us that change in state of delivery. That's much more significant, right? Once you get here, then you can say, oh, the daily time frame has officially switched to a sell program, right? But Tim, how can you have a bearish dealing range but you not have a sell program? In the short term, you can have a sell program, but on this time frame right here, right, the only thing we did was set up a bearish dealing range right there. That doesn't automatically switch you to a sell program on this time frame. Right now, this bearish dealing range on the lower time frames, right, will eventually get to the point where you've switched to a sell program, right? But right now, you just got a bearish dealing range right there, right? So you're working inside of this bearish dealing range on the daily time frame, right? You're working inside this bearish dealing range right there. Okay. Now, looking at our intraday time frame, right? On our intraday time frame, okay, we squeeze it up here. When we got up here, right, this was looking like a smart money reversal. Why? Because we came up here, got a bearish breaking market structure, right? When we got this move here, drop down, that was our low risk short smart money reversal. It was on the right side of a market maker sell model, right? Price drop all the way down, right? Traded below that low right there. So now on the way down, right, you know, you got every area of like accumulation on the top, right? Sometimes, a lot of times you want to see like the distribution line up, but sometimes you just melt through. So what do we do here? We melted through all of these areas of accumulation there. Then we got down to the bottom here, right? And then we had another meltdown through this first little stage of accumulation right there, right? That was our first stage of accumulation there, dropped down into what turned into a low risk buy. And then we went up there, right? So now we've come down here and we've engineered sell side liquidity. Now, in the sense of looking at this entire market maker sell model here, right? We're still on the right side of the market maker sell model coming from this point here, right? Remember, this was the more significant area to shift structure it, coming down below these lows here. Let's go back up to our daily time frame. All right. Come put that there. Previous day low. Come back down on our 15-minute time frame. See there? That right there. What's that? All right. So that there is that area there. So looking at this area as being the terminus for this market maker sell model, right? We have come down, engineered sell side liquidity, and moved back to a premium, right? So in the sense of this market maker sell model completing, right, we've come back up to the area where you'll be looking for a reason to sell down and finish this market maker sell model, right? So based off of this 15-minute time frame, right, we're on the right side of a market maker sell model, and we're in a sell program, right? We've switched to a sell program over here. All right. We haven't completed this market maker sell model, right? So we would be looking for reasons to sell until you complete it or invalidate it, right? What invalidates it? What invalidates this sell program? If we come back up here and trade above that high, right? That invalidates the sell program, meaning this right here was the terminus. That's all the far the market needed to go before continuing back up, right? Come over here, did we take that? And we did take that low. Right, yep, so we did take that low, right? So we did take that low, all right? We swept that low, then we engineered liquidity, and then we blast off away from it, right? And when we're in a sell program and we engineer liquidity, we're looking for price to come back and engage that liquidity that it engineered. And once we come back and engage that liquidity that we engineered, where are we looking? We're looking for that low right there. Okay. And then that low right there would complete this market maker sell model right there. Okay. So we got our invalidation point for this market maker sell model right here. Right. And then inside of this market maker sell model right here, we can come all the way up here and take out this weekly liquidity and complete a market maker buy model without invalidating this market maker sell model. But Tim, how can we do that? Because we consolidated here, we came down, and we took out liquidity, right? We engineered sell side liquidity during this consolidation right here. And then if we engineer sell side liquidity, displace up, right? If we were to pop up here and complete this market maker buy model, right? And get a smart money reversal here, what does that become? That becomes an initial consolidation for a market maker sell model. If you complete that market maker sale model, then complete that one. Now that completes that market maker sale model. Right. So we allow price to build out new structure, right? We let it build from the bottom up. Keep it in mind the narrative from the top, right? What's the narrative from the top right now? We're just engineering liquidity, right? Here, all this back and forth right here. All of this back and forth right here. All thing we're doing is engineering liquidity. But while we're engineering that liquidity, what are we doing? We're forming structure, right? We create a high, right? We come down, sweep these lows, create a low. We go up, sweep this high, create a high, right? We come back down, sweep these internal lows, create a low, right? So now structure is being formed right now, right? Like we said before, somebody commented about a channel, right? Prices in a channel here, like the, I'm saying, with the patterns, the chart patterns, right? You have your channel, right? Like that, because why? It was like we got our trend line liquidity, right? And we got a channel going up. I think like a wedge is like when it'd be like going up like this, getting thinner, right? Like it start out wide here, but it starts to get thinner as you go up. I think that's like a ascending wedge, right? But right here we got us a channel going up there, right? Making higher highs and higher lows, right? So overall, what is it still sticking with? That overall bullish thesis, right? Higher high, higher low, right? Sticking with that overall bullish thesis, like we said. Okay. But as we're building structure, right, starting to see some bearish structure peak in there. All right. Tim, you just keep saying the same thing over and over. I know, because I'm trying to hammer it home. Letting you know on the higher time frame, we just sitting on our hands right now, letting the algorithm build a structure. On the intraday time frame, right? You have ideas you can trade behind, right? On the right side of a market maker sell model for these lower time frames, right? We've moved back into a premium, right? Inside, right here, we move back up into a premium, right? And now we're hanging around equilibrium in between these two PD arrays, right? So what are we looking for? Some type of manipulation that will manipulate, then displace, saying, okay, I'm ready to go down. Why are you looking for that if the overall time frame is bullish? Because right now we're on the right side of a market maker sell model for the intraday, right? Right side of a market maker sell model for the intraday. Well, Tim, what if it wants to come all the way up here and take out that high? That's fine. Let it go up there and take out that high, right? Why? Because on the daily time frame below the weekly time frame in the short-term intraday, right? We got a bullish dealing range right here, right? So what can you look for? Price to drop down, manipulate out some sell side, drop down into a discount, be supported by discount PD arrays, then push up, giving you a reason to buy and go up into that buy side, right? If you understand how to read the price, you can play it both ways. All right. Well, Tim, what if I don't know how to play it both ways? Sit on your hands because you ain't got no clear direction right now anyway. It's 7:41. That's all I got. Hopefully everything I said made some sense to you. Hopefully it ain't just come out as a bunch of babble. But just want to hammer home. Don't try to pick tops. Don't try to force your narrative. Trade what you see. Is the highest high on the screen not a long-term high because it took out a higher time frame level? No, it doesn't. It doesn't make it a long-term high. It makes what makes it a long-term high is when you get two intermediate term highs on either side of it. So if you're looking at, let's just say, right, when we go to our daily time frame, right? So on a daily time frame, right, for our daily time frame, right, we got a swing high here, right? We got a swing high here, and we got a swing high here, right? So a swing high with a swing high to the left and the right of it. So this is a short-term swing high. This is a short-term swing high, right? Well, Tim, what makes that a short-term swing high? Because as we was coming up this side right here, right, we had a swing high there, right? Went up, we had a swing high there, right? We went up, we had a swing high there, right? So all of these are short-term swing highs because they only have swing highs to the left of them, right? There's no swing highs to the right of them, right? So they're all short-term swing highs, okay? Then we get up here to this swing high right here. That was another short-term swing high because they got all swing highs to the left and there was no swing high to the right. But when we form this swing high here with the close of that candle there, now that becomes an intermediate term high because it has a short-term swing high there, a short-term swing high there, and a short-term swing high there. That creates an intermediate term high. Now, if we go down to a lower time frame, right? Let's go to a lower time frame, and we probably could frame out it being a long-term high. So it has nothing to do with like the time frame that is taken out. It has to do with the type of high that it is. Okay, so we got an intermediate term high here, right? Because we got a short term, a short term, short term, short term. So we got an intermediate term high over here, right? We have an intermediate term high here, right? Short term, and short term, right? And then we have the most obvious intermediate term high over here. That one right there is very obvious, right? Looking here, this is one right here too. Short term, then an obvious short term there. But if we go with like the obvious, right? Because it's kind of right, right. We got that's one. So if we go with the most obvious one, that's the highest, right? Go with the most obvious one here. So now you got an intermediate term high here, intermediate term high here. So that makes this a long-term high because you got a intermediate term high with an intermediate term high to the right and an intermediate term high to the left. So on this 60-minute time frame, that high is a long-term high. But on the daily time frame, that high is an intermediate term high. All right. So I don't know if Lazy Chap still in here, but hopefully that makes sense. All right. We got any other questions? That makes sense. Did you learn from ICT? If you asking, was I in his mentorship? No, I wasn't. I learned from all the videos he put up on his YouTube channel. I went through the core content. Well, at first, when I first got introduced to him, the only thing I knew about was OTE. But then, I'm not a one, I don't like being a one-trick pony. So when he released the core content, I went through all of the core content. And then once I went through all the core content and, studied, I just started looking at the different mentorships that he was doing, 2023, 2024, 2025. 2022, all those mentorships, because each year he added a little bit more sauce onto how to actually use his concepts. And between, you know, so yes, I learned from him through the 2022, 2023, 2024, 2025 mentorships that he was doing, but I wasn't a part of his paid mentorship. Why I say Gigi left and I still see Gigi in there. What's up? Shout out Gigi. Shout out David. Appreciate y'all for pulling up. If this y'all first time hanging out with us, welcome. Do anybody got anything, man? All right. What's the moral of the story? Deborah, what's the moral of the story about what's going on with price right now?
Overall, we are in a buy program. It has not been invalidated. It's still intact. On the weekly, although we've created a bullish dealing range. Let's see. I'm sorry, a bearish dealing range. But we're still in the buy program. On the daily, the dealing range is bullish, but it's showing bearish tendencies.
And if you was to sum all of that up, what you said, and somebody was coming to you as a new trader saying, Deborah, what should I do? What would you tell them?
I told them sit on their hands.
Sit on their hands.
And let price show you what it want to do.
Exactly. And why is that? Because price is, as Michael would say, well, as Michael would say, 50-50 right now. Price is 50-50 right now because we can form algorithmic reasons to go to the high, and we can form algorithmic reasons to go to the low. Anytime you can frame it algorithmically both ways, it's low probability. And you're trading in a low probable conditions, low probability conditions, right? So if you choose to trade in these low probability conditions, then Jack be nimble, Jack be quick, right? Because price isn't giving you a one directional bias, right? We're at all-time highs, right? We're forming structure. And when we're forming structure, we have to allow price to engineer the liquidity. And what does it mean to engineer liquidity? Price is letting stops or liquidity build up on both sides of the market. Why is it letting liquidity build up on both sides of the market? Because the liquidity is the fuel that the algorithm needs to move. The algorithm can't just open and close all of its positions like we can. So it has to, what does it have to do? What's the foundation of everything? It has to do what first? You got to do what? What we say everything built on?
Accumulate.
It's got to accumulate, build liquidity on both sides of the market. Then it has to
manipulate.
Then it has to manipulate. Why does it manipulate? It manipulates to build more liquidity. It's taking traders out, it's trapping traders, it's tricking traders, it's building more liquidity. And then it does what?
Distribute.
Distribute. Then it's gonna distribute, right?
Distribute. Yeah.
Right, then it's gonna distribute. And the distribute, what's the distribution? The distribution is the real what? The distribution is the real what? Come on now, Smart Money Manuscript. The distribution is the real what? Mm-hmm.
I don't know, I haven't gone through it. Move or play where you want to be.
All right. Let me see. Right,
Choice.
I'm on the wrong one.
The most significant stage is what you say there.
Right here.
Oh,
What does that say right there?
The real
the real
trend.
trend.
The real trend.
Real,
There you go.
real
He'll learn to
trend.
share. He'll learn to share the real move. The distribution, that's the real move, right?
Mm-hmm.
It's going to accumulate. It's going to build a liquidity. It's going to manipulate. It's going to trick people, scare them out of positions, trick them into wrong positions. And then it's going to distribute. That distribution leg is where we want to participate. Why is that? Because that's the real trend. That's the real move, right? And unfortunately, by the time uninformed individuals realize, oh, this is the direction we're going, what has already happened? Right here, what does it say? Where we at? By the time, right there, what does it say? What does it say? Y'all want me to blow it up bigger for you so you can see it?
Smart money in their positions.
Right. By the time this trend is obvious, smart money has already entered their positions at optimal price, and they are now distributing or offloading them for profit. So when you see Bitcoin hit 100,000 and you be like, hey, I got 30,000, let me get some of that Bitcoin, cuz. Guess who you buying it from? You buying it from smart money that's now offloading it for profit. All right.
We about to go to the gym. I'm gonna holler at y'all.
Yeah, I'm about
Trying
to
to
get
take
out
your
of here.
nephew down.
I'm about to get out of here myself. Hey, make sure nephew set up. Make sure nephew set up.
Oh
So,
yeah.
Yeah, we gonna start. We starting the first Saturday in October. So let him know he ain't got no choice. He got to do it anyway. Just cause Uncle Timmy said so.
Okay, he locked in. He locked in. Then holler at you later. All right, everybody.
All right.
Yeah.
Yeah. So I'm done running my mouth for the night, man. Unless somebody got a question. If ain't nobody got no question, that's gonna be it. Tomorrow is Tuesday, so no tape reading tomorrow, but we will have a I'm gonna sneak into the high school group. No, you're not. I appreciate that, lazy chap. Hey, that's all I got, man. I ain't got nothing. I don't see nothing. We're gonna roll that beautiful bean footage before we get out of here. If y'all don't want to see the beautiful bean footage, you're more than welcome to leave, right? But we're gonna roll that beautiful bean footage, and then we're gonna get up out of here. Am I sharing my sound? Let's see if I'm sharing.
No sound.
Yeah, I'm not sharing my sound. I had to make sure I was sharing my sound. And then it's on the other screen. So let me share the other screen. That screen there. All right, let me share that screen. I wrote a beautiful bean footage, and then we're gonna get out of here.
My name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here.